Now that we've been through the process of finding a high time frame setup and we've looked at high time frame entries, it's time to start looking towards targets. Before you enter any trade, you should know exactly where you're going to exit. That goes for a win or for a loss. If you win a trade, you need to know where you're getting out. And if you are going to lose the trade, which is always a possibility, you need to know exactly where you're going to get out. If you don't have your target and your stop loss set before a trade starts, you don't really know what you're doing and you don't know how to manage the trade. As well as this, you could miss out on a large profit because it reverses because you get too greedy and you don't know the logical places to get out. Or if the trade goes bad, you may take a catastrophic loss because you didn't have a stop loss order on. So the next video we'll talk about stop losses, but for now, how do we actually determine a good exit? Now, the way that I actually trade, I generally like to not take partials. I will take partials in some instances, but in other instances, and the majority of instances, I will actually just keep my trade and trail the stop, which basically means I follow price with my stop loss. And then if the full move gets stopped out, it's the full move that gets stopped out. And normally a full move getting stopped out could bring us 2, 3, 4, or 5R, whereas the full trade maximizing to the target could be, 10R or 8R or something like that. The reason I do this is because when I used to take partials on my trades, which was a practice I used to follow, what would happen is you'd have a 10R target, but by the time you got to the target, you'd only be taking around 4 times the amount you risked off the trade. The reason for this is because when you take partials, you are cutting your trade size smaller and smaller and smaller as you go. Let's imagine you have 4 take profits, 3 intermediary take profits, and 1 final take profit. If you take a quarter of the move at each one, by the time you get to your final target, you're only holding a quarter of the move, which means you could risk $1,000, but you're only holding $250 worth of risk to the final target. With $250 worth of risk, that actually means you have to make 4R to make the $1,000 that you actually risked on the trade. Now, obviously, yes, you will have taken partials on the way, but you're never going to get the full trade potential out of a move. So in an instance like this, where we have a 16R move, if we were to enter and then take some profits at the first supply zone for, say, a quarter of the move, we'd be looking at, maybe like 1R there total, because we need 4R. So let's just price that up. So here we would have 1R, which is all good for actually covering what we have, and we still have 3/4 of the move on. But then if we were to take another move, say at 8R, we would then have only taken 2R worth of profit. And then what we actually have is only $500 running to the final target. So we actually only take around 2R, or potentially up to 3 because of the extended profit target. But then when we actually get to the final target, we may be looking at 5 or 6R, which is not bad. But when you're looking at a large swing trade, you want to be getting more than 5 or 6R out, especially when you know that the potential is there. With the stop trailing that I use, basically we can get into a movement and we can hold the full move and we can trail stops. Now, if we hold the full move and it gets up to here and we get stopped out, we are going to be getting stopped out at around 4R. That's already very good. That is potentially almost already the entire profit that you'd get on that trade up if you were taking partials. There are some instances where I do take partials, but for the most part, I am actually looking to trail stops. So we will talk about management as well after we talk about stops, but I think it's important to note now because when we are looking for targets, we need to actually have one clearly defined overall target, and then the trailing of the stop loss actually does the rest of the work. So how we actually decide a target for a trade is obviously to look at all of the concepts we've spoken about so far. So we've got our entry in here on the 4-hour and 1-hour timeframes. The market has started to move up, and we need to now define a clear target. Well, we can do that from the weekly down. We know that on the weekly time frame, we want to see the market come into this level here and above, because this is the imbalanced weekly zone, okay? So we can tell for sure that this is going to be our primary overall target. If we scale down, we may be able to get a clearer view. And we can now see that this sits within this supply zone here. So for me, this would actually be quite a nice target to go with. So this then leads me to consider, okay, are we imbalanced? And we can see here we do have imbalance leading into that zone. So that gives extra confluence for us to fill that area. And then, yes, there is imbalance up into this top zone here, which is this daily supply. But this is going to be a barrier for us. So I would look at this and think, right, that is a 15.5R trade. If we just pull it down to the bottom of the zone, still going to be a 14.4R trade. I'm more than happy with that. There is no reason to risk giving that away by trying to go for, a 20R trade, for example. And that is how I define the targets. So we are always looking for, if we are buying, we're looking for imbalanced supply zones on higher time frames or in previous structure. If we are selling, we are going to be looking for imbalanced demand zones. Now, as well as finding our one clearly defined target using that method of imbalanced supply and demand, We also want to identify a few other points where we may have to take partials if the trade setup tells us. Now, the opportunities where I take partials is when we get a very impulsive, fast move away from the entry. The stop trailing system works very well in markets that are efficient, but when the market is really impulsive, if it just shoots away, it's difficult to follow structure. So what we would then do is put the stops to the break-even point and then actually exit slowly on the way up. The reason I'm bringing this up now, before we actually get into the scaling video and before I explain it fully, is because we need to know the levels that we may want to get out at partials with when we are trading a movement, right? Obviously, we know most of the time we are going to want to hold the trade to full targets, but in instances where it's very difficult to trail stops and very difficult to manage the trade, we are going to want to secure some profits on the way up. So what we can do on the partial ideas is actually go to potentially a lower time frame like the hourly and mark out some high interest areas that may be good for taking partials. Now we can see here we have an imbalance into this small supply zone, but we do kind of have some equal high liquidity sitting above this area as well. So maybe for this one, I'd be interested in this area because this is a clearly imbalanced supply zone. And I think this is where I would really look to take the first set of my profits. The reason being, if we look at this structure here, we obviously have got this sideways slow grinding structure. If we hit this area and then sell off, which we've done so, and that has also swept the liquidity over this high, this is definitely the area that if it's going to reverse, it is going to reverse within, right? We may get a movement like this and then we may sell off. So if we look at that area, and obviously if we get the chance to trail stops, we will trail stops. But if we don't get the chance to trail stops and the market is very impulsive, this is just an area we know that it's good to take some partials within. So we can also look towards some other areas as well to find good areas to take partials at. Now, if we scale back to a previous price, this stands out to me. We can see here the bottom of this imbalanced supply zone. So this could be our next partial taking point. What this gives us is two areas we can take partials. We can take a quarter of the move here, we could take a quarter of the move here, and we could leave the other half of the move running to the full target. If obviously we get nice price action like this that we can work with nice and steadily with an efficient upward trend, we won't take the partials and we will instead just run with the stop trailing system. But we do need to know those exit points and those targets just in case that is the scenario that we are presented with. So if we just let this trade play out, we see initially we get a tap in and an instant fly into that zone. When we hit that zone, we have seen a wick here. So we may look at taking a quarter of the move. That is going to be about a 1.25% profit on a 1% risk move. Then what we can do is allow the market to continue making its action. And as we see, we get a higher high, higher low, and then a higher high once again. So what we can now do is cut the partials off, stop taking partials, and actually just trail it normally. So we actually have taken a quarter of the move. We have 3/4 of the move running. And because we've seen higher high, higher low, higher high, we can safely trail our stop under this point, and we can allow the full 3/4 of the move to run to the target. Okay, so obviously I've gone quite deep into the scaling process in this video, but we will talk about that more soon so you can get a full breakdown of how it happens. But it is important to cover now because when we are choosing targets, we need multiple targets with one large, clearly defined target in mind. As we can see, the clearly defined target was hit, and that would have been a 3/4 of the move hit at this level, and then a quarter of the move taken at this level for 1.25% profit. So let's say we were risking $1,000 here. We would take $1,250 at the first target, and then the second move, which is a full 14.39R move, is actually going to be around $10,790 here. Okay, so we can see how effective that actually is in taking partials along the way. Now, obviously, you may not be trading with $1,000 stop losses, but you'd be surprised if you get a funded account, which hopefully you can when you've been through these concepts, back tested them and practiced them. These are the kind of movements that you may be able to get if you are focusing on the higher time frames. So that is the target process then. Basically, we want to find one clearly defined target using the supply and demand. Imbalanced supply and demand, that is the most important factor to consider when we are looking at targets. I always like to focus on imbalanced supply and demand zones for the targets on pretty much every single trade I take, whether it's a continuation trade, whether it's a reversal trade. It's always an imbalanced demand zone or an imbalanced supply zone, because these are the areas that price is drawn towards. They're kind of magnetization levels that price gets pulled into before, if it reverses, before the reversal, right? So we know now we've hit this area, we could continue up, we may roll over to the downside. And as you can see, we got quite a large sell-off, but then I do think we do continue up to that secondary zone. But as you can see, this was a clearly defined level because we would have been through quite a lot of drawdown of around 50% of our profits before the move continued. So there's no complaints around this whatsoever. And that just uses an imbalanced supply area on the daily chart, I believe it was. Yep, that nice blue candle there. To actually finalize our profit taking and take all of the profits on the movement. So that's the process of setting up your targets. I hope this video is beneficial. I hope it's all starting to come together now. The high time frame trading is pretty simple when you have the processes down, which obviously you'll need to back test. We are just working with structure, supply and demand, liquidity, and market efficiency. That is simply it. And we just run price back and forth through high probability imbalance zones. So in the next video, we will talk about stop loss placement, and then we will have a full basis for setting up a successful and profitable trade on the high time frames. I'm then going to show you a few examples, and I will talk about how to manage your positions as well, going deeper into kind of what I've touched on in this video on the topics of trailing stops, scaling in, and taking partials. So I'll see you in the next video.